SBA credit lines, okay? Look, here's the deal. This is the epitome of what
me time.
So I'm going to show you about 4 or 5 of the most common SBA credit lines. And what I want you to keep in mind is one of 2 things. First of all, or what many things, but first of all, these credit lines work if you're a well-established business. You have to show that you've got cash flow, tax returns. You've got to have better personal credit, and you also need to have collateral, account receivables, equipment, inventory, something like that.
Oh my God, that can't be out here bullshit.
Like letting your customers pay you on terms is the most common collateral used for SBA. But the reason that these have to be discussed is that even if you can't get this now, you need to know what it does take to get them, because this is what you really want. This is where the rubber meets the road. These are the best kind of credit lines you're going to get. And they insure 90% of the loans.
They don't want me to quit. I'm going to keep hanging on. I ain't going to quit. I'm going to go win it. Wait, I'm going to win this. As long as they don't, yeah, there we go, yeah. Oh my God, that's space credit. I'm a
risk. Now they have 4 of these kind of credit lines. We're going to dive into them all right now. They're called capital lines. That's the program that
I'm going to leave that job. I'm going to leave behind those.
Up to $5 million. But if you're trying to get $350,000 or less, pretty easy to get approved. Like we got our credit line in less than 30 days with SBA because we're saying less than $350,000. And now the EIDL is winding down. EIDL's done, I think, last week, this week. Okay, and of course PPP was done a while ago. Now SBA's got all this time freed up to make these approvals even faster. And of course, if you are a veteran or many other categories, then they can even give you expedited loan approvals and even waive a lot of the fees as well. So what does it take to get approved? Well, you're going to need to have established business credit. Don't worry, I'm going to talk to you about how to get that as we move on with this training. You need to have good personal credit. If you have any dings on your personal credit, I know you probably do, because you're an entrepreneur and we're risk takers. So our credit gets all banged up. You might want to get some of that like that before you get into
where's this layup? It is. I'm gonna take. I'm gonna take all this shit off.
Revenue. You're gonna have to supply some kind of collateral. But if you have it, then you're typically going to get approved for any of these. One of which is called a seasonal line, and it's basically just designed for seasonal business. So a lot of businesses do really good during one part of the season, and then they slow down in another part of the season. A lot of seasonal businesses. Florida, we don't have a lot of that, right? Because it's pretty nice. But air conditioning is an example down here. We don't have a lot of air conditioning repair happening during the colder months, during the winter time. Okay, if you go over to Utah, where I take my kids skiing, well then, there they don't have a lot of action in the summertime, right? They slow down when all the snow melts. So seasonal credit lines really good to helping you get through seasonal times in your business. Contract lines are available to eligible small businesses that need money to execute their work contracts. So
what the fuck is going on?
To get lines of credit as a contractor to cover a lot of stuff, because you might have to build a house, and they're not going to get paid until they sell the house. So you could have weeks or months before you get paid, and this covers that gap. You're also able to get a builder's line, which is specifically for people building homes, commercial, residential construction, and you're also able to get a working line, and the working line is like a working line credit. It's a 7A credit line, right? And 7A have loans and credit lines, and here's why you need to know about this, because when we talk about these 7As, these are used for general purposes. I can use it for anything I want to. For the business, of course. So I can use it for just general stuff. I can pay payroll. I can launch marketing campaigns. I can expand. But I can also use them to buy new businesses. And right now, over the last 2 years, that is the hottest trend I've seen. Is business owners are like, whoo, it's a lot of work to build this thing. Why don't I just have somebody else do all the work, and then I'll just buy it from them? And if you're smart, you can buy another business with little to zero down. Here's how you do it. You use an SBA 7A credit line like this, or a loan. You come in and get up to 90% of the purchase price from that. Then the 10% can come from any of the programs we're talking about.
That's what I'm saying. I'm leaving all that shit the same, because that's what my nigga was doing.
Come in and get 90%
I already know what my nigga
purchase to buy a business covered, and then you can get 10% from credit line hybrid, from cash flow financing, from a seller-held financing, which they're all looking
because I'm still on my ass.
Any number of ways to do it. Now you're getting the money with no money down. Does that happen? Yeah, happens all the time. Roland Frazier is one of the biggest trainers in this space. I help all of his students come in and get the funding they need for their acquisitions, and I see them buy a lot of stuff. So a lot of those guys are out there buying businesses, and I've got a lot of people in my circle that do it. At Credit Suite, me personally, I'm always looking for opportunities, and over the next couple years, we're going to make a lot of acquisitions as well. One of my buddies just bought a huge reputation company. It's now doing like $3 million a year in revenue, spitting off all kinds of cash because of the investment that they made to grow the business. So a lot of opportunity here to buy businesses, and if we do go into a recession, that is the best time. People start having fire sales for their businesses, giving you the ability to come in and grab one of them. So even if you don't qualify for SBA now you know collateral cash flow credit, what you need to work on to get in a position where when these fire sales start occurring, you're there. The opportunities are there. So I want to talk to you a little bit about Kylan and a little bit about what this actually did for him. So, quote, I believe the Business Finance Suite is the first step-by-step paint-by-number system securing anywhere from $50,000 to $250,000 in business credit. There are reports on your business credit reports that helps you separate personal and business credit. But unlike most, you have access to coaches that will take your hand, walk you through the system, and answer specific questions you may have related to your business. Amazing opportunity for business owners. The reason I read this to you is that Kylan was a guy that was a gym teacher, and he wanted out. He didn't want to teach gym anymore. I don't know why. To me, that seems like a lot of fun. And I'd be really strong, so I climb the rope all day. But that's a whole other story. ADD, don't mind me. Okay, but that being said, okay, he wanted out. So he got into offering business credit financing, which is something that we do. We helped him get into that space. And then he built a 70-figure plus business, had coaches all over his area, going out to banks, getting their business to come in. And he was able to build this business using this kind of credit line, using these kind of credit lines, and using business credit as well. So another success story of a guy that goes from gym teacher to successful, now what will become multi-million-dollar business owner, all because he was able to tap into this credit line and tap into business credit to be able to get him there as well. Okay, so we'll talk about alternative SBA.
I got to whatever the fuck is
off. When these alternative lines come in, I still find interest rates are pretty low. SBA, you can typically get 6-7% or lower. Alternative credit lines are usually 8-10% or lower, so very similar to SBA. But you usually only need 1 year tax returns to get approved, and you only need average credit, like 600, 620 credit score. So these are oftentimes offered from private investors instead of banks, and they're just way easier to get than actual SBA loans. SBA loans, the problem with them is that SBA guarantees them and a bank issues them. So you got two qualifications there you got to go through to get approved. Now, once you get it nailed down, like we have it nailed down, then we can come in and get financing pretty quick through SBA system. We got a loan, we got another loan, we just got another loan getting ready for recession, and we just got a credit line as well. So like I said, we practice what we preach. We see the economy shifting, and we are stocking up on cash. And we're stocking up on cash not to weather the storm, because we want to jump on opportunities. We know there's going to be fire sales. We know there's going to be a lot of opportunity to get in and be able to grab businesses, make acquisitions, make big moves. So we're stocking up on money, as you should be, preparing for an economy to change. But with alternative SBA lines, they're just easier to get. 600, 620 credit scores. You're able to get 1 year tax returns, show some kind of profit, and there's a lot of these private lenders out there or private investors that will be able to give you these kind of loans. So one of my favorite, because you get terms similar to SBA, but way easier to qualify for than SBA financing.
Yeah, I come check you out, bro, man.
A lot of these different types of these available, and a lot of these private lenders are more creative and more forgiving than banks. Because, banks are like federally insured. They have to be very conservative.
Dirty ass game. I'm trying to, where is my jump shot, bro?
Conservative with their risk. They actually look at riskier stuff, even risky stuff, because that's where they make their money. So ways
you get my ass beat by my jump
shot. And you can get terms upwards of 36 months, even higher, upwards of 5 to 10 years. So really like that. inventory financing, a few different options here.
Damn.
Product-based businesses. They stock up on product. One of my buddies, Marat, down here does that. He's got a big old warehouse and he gets stuff in and trucks and he sells it all over the place. That's a massive amount of inventory to manage. Massive amount of cash to buy the inventory. So think about this from two angles. Either you own this kind of business now, or you may buy one or start one. And this is going to make it easier to do both because you can actually get the money you need to buy the inventory.
Just want to lay the ball up.
You need to borrow against the inventory you already have. So a lot of people, like my buddy, he's not in this position, but he stocks up on this inventory, then he doesn't have cash to grow the business. And then in that case, and he's got to come in, he's got to get money, he can use and borrow against the inventory, get a credit line for upwards of 50% of the value of that, and then use that credit line to be able to grow the business. So you can use inventory financing to be able to get the money you need to buy the inventory. You can also borrow against the inventory you already have, 5% to 15% interest rates, funding in 3 weeks or less. Pretty cool. Now, it's not a credit line, but I want to drop a little nugget here because my favorite funding option that came up in 2021 was something called crowd-based funding for this. So it was basically inventory crowd-based funding. And with this, you basically are able to come in. If you have $150,000 in sales, you basically go onto the platform, they raise the money to buy the inventory, and you never need to buy inventory again. The crowdfunding buys the inventory, you sell the inventory as you then pay off the actual credit line. So I just gave you the secret formula to launching or growing any kind of e-commerce business. Because now you can stock up on all kinds of products.
Bro, the badges, bro. I gotta put whatever I gotta put all that shit back on right.
Flyboarding, flying around with like this water thing. The other day, just yesterday, we were doing it. It was awesome. And this jet left thing for $100,000. You can buy the thing on Alibaba for $3 grand. Okay, so you might come in and create a whole other business taking stuff from Alibaba or other places and then getting the inventory you need to actually sell it. All that costs money. How do you get the money? I just gave you multiple options. I gave you SBA financing to buy a business already doing it. And then if they're doing $150,000 in sales or more, now you can come in and get equity crowdfunding through a source called KickFurther. And KickFurther, you can just go to creditsuite.com/inventory. And what they will do is actually then get you the crowdfunding for all the inventory you need. So you can scale without limitations because you can get all the money you need to actually be able to come in and scale the business. So pretty cool. I think a pretty good option for you as well. Now, HELOC, house for sellers. Look, a lot of real estate investors here, and I think a lot of people are talking about bubble bursting in the housing market. Things have to change, right? We got skyrocketing prices of homes. We have inflation skyrocketing. People's revenue is not, or people's income is not skyrocketing. So at some point, something's got to shift. And when it does, there's a lot of opportunity to get into real estate investment. Had several of these guys on my podcast that are smart cookies. Okay, and they're using HELOC or what's called house for seller program to be able to do it. You can get 100% of the money you need to be able to buy and rehab properties using these kind of credit lines. So this is a really popular way to be able to come in and get the money you need for real estate investing. Okay, now you can use it on real property, you can get the line of credit or basically get the money in draws to be able to build the house or buy the house and to be able to fix the house up as well. You don't need to have great credit, 600 type credit scores to do it. You don't need experience to be able to flip houses. All you need is the financing. And this can give you the financing you need to break in to real estate investment. Look, what I hear from people is that they want to get into real estate investment, but they don't know where to get the money. So if that's you, if you have an interest in doing that, well, then now you got it. Because again, if there is a bubble, if it does burst, I don't know. I'm not an expert in that area. But if it does happen, then you're going to have a chance to buy properties really low. And by the way, okay, one of my friends is exactly what she does. Her entire business is Airbnb. She's in her 30s, retired, lives off Airbnb money. And again, the nice thing is all her properties run free and clear. And now what she's doing is getting HELOCs to get bam, 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 bam. It gets all these properties stocking up on available cash. So when the market shifts, she can come in and buy stuff low. Okay, so again, the people that I know in the real estate space, it's exactly what they're doing right now. They're stocking up on money, preparing for house prices to fall, so they're in position to buy. And this is a great program, great credit line to be able to do that. Now, more options as well: bridge loans, cash out refinances, permanent bank loans or mortgages, hard money loans, a lot of other kind of funding available for house for seller. But again, HELOCs is one of the most popular options to be able to get in, find the property you want, and actually be able to flip it. Number 2, securities-based lines of credit. I'm actually going to give you 4 options here. I told you I got a bunch of bonuses after you're ticking down to 2 and 1, and then you're like, oh, we're over. No, we're not over. I got a bunch of bonuses behind that. But this one program, I'm going to give you 4 different funding programs right here. Securities
these fucking AIs ain't playing with nothing, nigga.
Use stocks and bonds as collateral. So it doesn't have to be your stocks and bonds. It could be somebody else's. So go back to my dad as an example. If I go to my dad to get money to start or grow a business, he has to sell his stocks, he pays penalties, he loses the ability to earn interest. But I can go to my dad, have him get a securities-based line of credit against his stocks. Oh, this is so ridiculous. Honestly, this is one of my favorite funding programs because you're double dipping. It's not even fair. I don't even understand how it's legal, legit, and it's 100% legal and legit. Let me tell you what I mean. In my example with my dad has his money in the stock market. It's earning interest. It's earning him a rate of return. He can use that same stocks, get a line of credit against it, then use it to help me launch my business, right? Or I can do the same thing. I can borrow against my own stocks and bonds, 2 types of financing there. I can then get a credit line and use the money to launch business. So I got money working for me 2 different ways here. Okay, it's why if you see all these people that say, become your own bank, infinite banking, it's the same premise. What they're doing is they're getting whole life insurance policies that let you borrow against the policy. They get loans against it, then they use the money to reinvest. Okay, it's my number 1 investment strategy. It's where all my money goes. It's how I invest. Put it all in the whole life. I borrow against the whole life. I then use that to be able to get and reinvest that money and get even higher rate of return. And my money doubles every 7 years from using this kind of strategy. This is the same thing. You're double.
No, she did.
You got your money
get a free throw.
Money, and then over here, that exact same money is now being leveraged to be able to get a credit line, and now we're launching a business.
9 and 36,
so the credit line's growing this business, which is making money while the money's sitting in the stock market making money. You're double dipping. The money's working in different places for you. Exactly.
The fucking depth shot is fucked up.
I love it because you still earn interest on the stocks
stupid shit.
I love it because it's an easy way for you to be able to get money. There's no credit score requirements. They don't care about cash flow. You can get it as a new business. You can get it as a high-risk business. Most kinds of security stocks and bonds are accepted. So it's just no kind of noise outside. I was trying to figure out what that was. I thought it was a helicopter buzzing the building, but I don't think it was road construction out there. So anyway, again, ADD is what happens with us entrepreneurs. So now you've got the money working in 2 different places for you. Okay, and that's what I really like about securities-based financing. And I like the fact that you can borrow against somebody else's securities as well. It doesn't just have to be you. You can borrow as much as 90% of the value of the stocks and bonds. You still earn interest on the stocks and the bonds. And to give you funding options 3 and 4, you can do the same thing with 401k or IRA. You can also get a loan or a credit line against 401ks and IRAs as well, whether it be you or somebody else. So now we've got stocks, bonds, 401k, IRAs, 4 different ways we can use collateral of ours or somebody else's to get money. And the somebody else's becomes very important. Because if you really want to succeed in business, you have to think outside of the box and be creative. That's how I do things in financing world as well. So if I go to my buddy and say, hey, you got stocks and bonds, and they say, yeah, I got like 50 grand invested in stocks and bonds, I say, I'm about ready to launch this business right here. Here's what the deal is. You know me. Sounds like a good plan. What do you think about this? Would you want to make some money off this? They're like, yeah, I want to make money off it. Well, I can actually tap into your stocks and bonds. You still leave them where they are. You still earn interest. You still get the rate of return. But I get a credit line I use to fund the business, and I'll give you 1%, 2%, 3% ownership business. And now all of a sudden you're getting distributions and equity in this company while your money's working for you in the stock market. That's a heck of an opportunity. And now you're not hitting on family members and friends for help. You're giving them an opportunity to be able to invest in this. So stocks, bonds, 401ks, IRAs, 4 kinds of funding that you can tap in here to be able to get money. And all you really need is $25,000 or more in your stocks and bonds. They review your statements 2-3 weeks. You get funded. Credit doesn't matter. Collateral or cash flow doesn't matter. You don't need any other kind of collateral. And again, 90% against stocks and bonds, and you're able to get interest rates of 5% or lower. And the other thing is that you're also able to come in and be able to get loan or credit line 90% on stocks and bonds and 100% on 401ks. So definitely one of my favorite funding programs is that. But number one, let's talk about business credit cards. Look, I know credit lines and credit cards are a little different. I talked to you in the beginning about the difference, very minor differences. Credit lines and cards, the main difference is you can take cash out of a credit line at like not at 20%, and credit cards oftentimes cost you 20%. But when it comes to revolving credit cards are way easier to get than credit lines. So it's something you want to look at. They're offered by American Express and Chase and Bank of America and Barclays Bank. Capital One has one, even if you have challenged credit. You can oftentimes get these things for $5,000, $10,000, even $50,000 limits. Okay, in my world, I funded my mortgage business with one of these. I got actually a $50,000 card from Bank of America that I used to fund the mortgage business. So again, a lot of benefits here of using business credit cards, something that you really want to think about as well, because they're way easier to get than credit line. So let's talk about some bonuses here. And the bonuses I want to talk about are corporate credit. Because a lot of corporate credit you're able to get even if you have some credit issues, even if your credit's bad, 600, 620, even the ones with personal guarantees, only oftentimes need a 600, 620 credit score. You don't need collateral. They're unsecured. You can get them as a startup. You can get them in a high-risk business. You can get them with no cash flow verification. You can basically get this no matter whether you can get any kind of funding or not. And you could use this for the business to fund itself.
This was fucking my whole body up because I'm sitting curved up.
You can get money, and you can get it from day one from starting your business. Really? So bonus one here is what's called vendor credit, and these come from starter vendors. Starter vendors are places like Uline and Granger that will give you credit lines to buy the stuff you want and need to grow your business. If you just have a business license, Granger will give you a $2,500 credit line as a brand new startup business. It's absurd. So you can get thousands and thousands and thousands of dollars from these startup vendors, regardless of collateral, cash flow, and credit, and be able to start growing the business. Net 15 to net 55 terms, which gives you 15 days to 2 months to actually pay them back. And again, you can get it regardless of any qualification. So even if you can't get any other kind of funding, when you get a handful of those guys on your credit report, then you can move on to what's called retail credit. And retail credit's like credit lines in almost every major retail. So for example, you can get Staples, Home Depot, Costco. You can get Sam's Club. Almost every major retailer, even Nordstrom and Macy's, offers this. So this kind of retail credit.
It's a lazy motherfucker see.
These places I'm mentioning sell just about everything we want and need. And why this is important is this. So many business owners make this mistake. They get a loan and they get a credit line, and they start buying crap they could have used a credit card for. I'm like, why are you doing this?
Boy.
Save the loan, save the credit line for stuff you can't get a credit line for. Don't buy this cameras here. Don't buy these monitors here. Don't buy the keyboard. Don't buy this stuff using credit lines. Go get a credit card at Staples. Go get a credit card at Office Depot. Get one at HP. Get one at Dell. Get one at Apple. And then you can be able to buy all the stuff you need from those places and keep your credit line and keep your loan so you can use those for things like payroll and Facebook ads that you can't use credit cards for. If you use this strategy, you'll find that 80, if not 90% of what you need to buy in your business, you can use this kind of corporate credit to buy. And remember, no cash flow requirements, no credit requirements, no collateral requirements. Anybody can get this. So what I like is that 80, 90% of your need, what you need in business, now I just gave you a solution to get, and anybody can get it. Then the credit lines, the loans you get, you can use for all the other stuff that you want for growth, like scaling, for ads, stuff like that. So here's an example of some approvals here at $1,200 credit cards here, $3,500, $7,500 Amazon, $1,000 Pilot Flying J. Here's a $1,200 credit line. Here's another one for $10,000 as well. Looks like a Home Depot card. Here's a $100, $3,000 credit cards, or $1,000, $3,000. Here's another one with Sunbelt Rentals approval. Here's a $10,000 approval here. That's a bank credit, which we'll talk about that. That's a Chase credit card. Here's a Valero credit card. Here's a bunch of these kind of credit cards that we're talking about here. You get the idea. If you don't, go to creditsuite.com. There's literally hundreds and hundreds of different approvals that clients and people that are using our system are getting. So go check that out and you can see what I'm talking about. Now, bonus 3 is service credit, and this is basically credit that you can get if you have 5 accounts in your business credit report, and you're able to get services that you need. So there are things like Staples that sell products, and there are places like Labor Rent that sells services. So a lot of the services you may need to be able to grow your business, you can get from a lot of different service providers, and with a handful of accounts in your business credit reports, you can get this kind of credit as well. Fleet credit, big shape.